Greetings to all. Welcome to our new episode. Real estate is an evergreen investment option for investors of all generations. Today, let us touch upon the fundamentals of real estate investment.
Yeah, sure. See, real estate is arguably one of the most sought after investment options available for people from all walks of life. And it has been one of the most popular investment options, for generations. So in this video, we will talk about the or discuss the fundamentals of real estate investments. So let's start with the types of real estates. Let's understand what are the different types of real estates in the market. There are so many, but we will look at the most popular ones. Residential real estate. Uh, that includes houses, villas, apartments. Commercial real estate, um, which includes buildings, shops, malls, hospitals, hotels, restaurants, and so on. And of course, lands can be commercial, it can be residential. Now, these are all direct investments in real estates. Now, you can also make indirect investments in real estates. How? It can be through real estate mutual funds, or it can be through REITs, meaning real estate investment trusts, and few other vehicles.
Let us briefly explore the benefits of the real estate
Yeah,
investment.
yeah. So it has few benefits, compared to other investment options. One is that it's one of the most safest investment options. When we say safest, it is less risky investment options. Um, when compared to other popular investment options like stock markets, because market is volatile and it can be risky, but it can make bigger returns too. And the benefits of, investing in real estate come in different forms. It can be short term, it can be long term. Short term in income or gains includes rentals, lease, which are recurring in nature, and it can be short-term capital gains too. You buy a property and hold it for shorter period, few months, and sell it off to get the capital gain. Now, long-term capital gain, that's the investment in real estate for a longer period, for years, when the value appreciates in multiples, and the investors make a lot of money out of that. These are the broad ways of making gains from real estate investments. Now, another important benefit of real estate investment is its capability to beat inflation. Meaning, say the real estate incomes, short term or long term, or rental or lease incomes, all beat inflation. Meaning, it safeguards your money from investment, or this incomes increase in sync with the increase in inflation. That's the crux. Now, there of course, everything has cons or disadvantages or drawbacks. So one major drawback of real estate investment is liquidity, meaning it is not easily encashable, meaning you cannot immediately encash or liquidate this property into cash, like say gold or fixed deposits or even stock market shares or even mutual funds. especially large, long, high value investments will take time.
Okay, there are some fundamental things the investor has to take care of before investing to real estate.
Yeah, there are many factors we have to consider, but we will talk about a few very important, very basic things to consider before investing in real estate. One is the location and market. See, the value of the property varies from place to place and within place, from locality to locality. So, we know that in cities the prices are high, and even within the city, the suburbs will be comparatively low. When you go to towns and then to villages, the price comes down. And even within the city, if with the proximity to certain landmarks or certain places, say for example, if you take Kochi, the places near to Info Park are in command premium prices. And when you go near, I mean, even within that place, go far away, meaning, far from, so 5 kilometers away from, the prices come down. And even within the Ernakulam city, for example, it changes. So the place is very important. So you will have to study the market to understand what is the price, prevailing price, and is there any prospects of increase in the prices. It all depends on the growth and development, the future growth and development of that place, and so on. Now, another thing is the budget. You have to have an understanding of your budget, how much money you want to invest in real estate. So then it is not only the land cost that you have to factor in. You have to consider the registration fees, the stamp duty, the incidental charges, brokerages if any, and development charges if any, and all these factors you have to consider, and that everything should come within your budget. Otherwise, things can go wrong. Now, legal diligence, that's very very important, because you have to um, get all the title deeds, encumbrance certificates, occupancy certificates. Depending on whether it's a land, whether it's a building, there are so many other certificates and documents. You have to verify, and if and you really have to get it verified by an advocate, so that otherwise, some small problems in the documents can make you lose all your money invested there. And also the environmental factors and all we have to consider. Now, the next one is the investment strategy. And so investment strategy means, it all depends on what is your appetite, what's your investment goal, whether it's a short term goal, whether it's a long term goal, and whether you want to invest directly in the in real estate, whether it should be commercial, residential, and whether you want to invest indirectly in the real estate through the real estate mutual funds, REITs, and so on. So these are some of the factors we'll have to consider as fundamentals uh, before investing in real estate. So if you do that properly, then you can, I mean, you will make gains. But if you don't do diligently, then there is always a chance that you will lose your capital. Thank you for watching us. We will be back with another video, another subject, and we will be coming on. We'll be coming with a few videos on real estate itself. It's also a vast subject. Thank you.
Thank you.